Marketer of the Day, episode 613. Jumpstart Your Retirement Income and Plan for Financial Freedom with Bill Corley.
Hey everyone, and welcome back to the Marketer of the Day podcast. And I have a question for you. Do you plan on getting old? Do you planning on retiring? Well, I think we all do. So you're going to want to sit up and pay very close attention to Bill Corley, who is a certified financial planner, and he specializes in retirement income issues. And he holds an RICP designation, and he studied Social Security, taxes, investments, insurance, estate issues. So he was named a 5-star wealth manager for the 4th time in his career. He offers workshops on sustainable retirement income. And the reason for that is because a lot of people fear of running out of money before they die. I mean, none of us want to be there. And Bill is the author of Jumpstart Your Retirement Income. He's based out of Folsom, California. His website is billcorleyplans.com. So, Bill, glad to be talking to you.
Oh, thank you very much.
So, you're very welcome. So, retirement, what do we need to know?
Well, we kind of went from having what are called defined benefit plans where the employer, you worked, say, for that one employer for 30 years, and at the end, you got a nice pension. Now we've gone to the point where you might be working 6 or 7 different jobs or even in different careers. So you really have to take care of yourself in retirement.
Okay, yeah. I mean, scary stuff these days where people might have to change careers or get laid off, or maybe their whole profession or their whole industry changes and they have to go through those transitions in life. So they can't just get that job at PG&E at age 18 and then ride it out till age 65 and then have it all cut and dry, right?
Very, very much so. And so they really have to take it on their own arms or themselves by, putting money in that 401k and saving money so that when they go to retire, they have enough so they don't run out of money before they run out of life.
Right. Well, okay. So you mentioned things like a 401k and it seems like that a lot of people just get completely overloaded, overwhelmed with all of this retirement stuff, right? I mean, like you hear those crazy nightmare stories about how there are 562 different flavors of these retirement packages, and then number 563 is like you pick and choose what you want. So it seems like it's an attempt to be helpful, but then people are just like, oh my gosh, where do I even start? What do I even do?
Well, that's definitely, they feel overwhelmed. And so that's why what I've been doing is, and I've really enjoyed over my career, Robert, of doing workshops so that there people can come get good information, be educated on that, and then I can really help them out that way.
Awesome. So it seems like, you're this retirement income specialist. So it seems like you want to do the work for people, but you also want them to be educated in what it is that you're doing and what kind of decisions needs to be made, right?
Yeah, definitely. Because what I do in the seminars is the biggest retirement income source, Robert, for most people is Social Security. So we talk about Social Security in the seminar. Then a big one that people have a lot more control of, especially in retirement, is how much they're going to pay in income taxes. So I go through a lot of that because people are very lost when it comes to this. And then it's being able to kind of take all these different pieces of kind of their retirement pie and how do they really make a good retirement income plan. And that's really what I specialize in doing.
Okay, great. So people, they might have this Social Security, they might have all these like the pieces of the retirement pie, as you say. They want to minimize those income taxes and still be able to, pay out to themselves when they're old. So when people come to you and they attend these workshops, what's the starting point? What do people usually say? Are they completely unprepared? Are they just confused? Like, what sorts of language are people saying to you, or what kind of questions are they asking?
Well, the best way to probably talk about that, Robert, is give you an example. I was doing a seminar or workshop 4 or 5 years ago, and I remember a lady coming up to me and kind of talking to me before the seminar, and she says, well, Bill, my husband and I have both good jobs. They were fortunate enough to have a nice pension. And then they had saved, in their case, a good sum of money, about $500,000 in, say, 401k type plans. And I said to this lady, let's say her name was Mary, and I'd say, hey, Mary, that's wonderful you've done that. But now that you've got this money saved, do you have any type of a plan? How do you plan to take this money out? And Robert, it was very much that she had kind of this deer in the headlights look and her mouth kind of dropped. Nobody had ever asked her, and she'd never thought about how to really take this money out. And that's one of the things that I really talk about when we do the seminar.
Sounds sort of scary. It sounds like maybe people they don't have this plan, and they've maybe been plugging along. They say, all right, I've got the saving part handled, but then they don't know what to do to actually cash that out.
Definitely. In the industry I'm in, the financial services industry has been very good teaching people how to accumulate money, but really has not come up with good plans as to how to spend it. And what I mean by spending it is to pay the least amount in taxes and cutting expenses. That's the reason why I got that RICP, which is a Retirement Income Certified Professional, which, I'm a certified financial planner, and about 1 out of 4 advisors in the industry are certified, but only 1 out of 50 advisors have this additional designation. And it really goes through all these different things to make sure that you can help clients then have enough money in retirement, really working on that budget. Because the other thing out there, Robert, is, with so many companies now downsizing, they might lose their job tomorrow. What are they going to do? And an interesting statistic out there, the largest demographic in America that is growing the fastest right now as a percentage are people over the age of 85. And I was just at a continuing ed conference on Friday and was just reading different pieces of information. And it's amazing to think that we will have it's estimated that we'll have over 1 million people over the age of 100 by the year 2050.
Wow. Who would have thought, right? It's like it's a good thing, but then it's also got some baggage, got a little bit of a problem there with it. So if people are saying, okay, well, maybe I'll be one of those people that lives to be 100, I might be one of those million, or I might live to be 85 plus, but maybe someone listening is, 40, 50, they still have time, they still have decades to right the ship if things aren't good. What sort of things should people be thinking about, worrying about, doing to make sure they're covered in this time they have left?
Well, I think the biggest thing that they have the most control over, it still working and even in retirement, is spending less than they make. We seem to be, as Americans, kind of with Madison Avenue, we want to buy everything and we want to keep up with the Joneses. And if you really want to have a good plan, a trajectory, and I talk about that in Jumpstart Your Retirement, to really say, hey, these are things you can be doing. And one of the big things is spend less than you make and start saving. Look at those plans that are available through work. Maybe you have a 401k, maybe you're in education, you have a 403b, or maybe you don't have any of those, but you can still put money into an IRA. Then you've got to look to decide, well, do I think I'm going to be in a lower tax bracket in retirement? Most people are not. So one of the things that I recommend people do a lot of the time is do what is called a Roth IRA or a Roth 401k. That means you pay the taxes now. A good way to kind of think about that is the farmer. Does the farmer want to pay taxes on the seed or on the harvest? And the Roth IRA concept is you pay it on the seed so that when you harvest it all, you've got a lot more money and you've already paid all your taxes. It's what I'm doing myself.
Interesting. And like this sort of thing, when I was younger, when I was in my 20s, I have to admit, I hated it. It bored me to heck. But then once I actually looked into it, then I realized, okay, well, now I have options, right? Like instead of saying, oh, well, there's all these numbers and letters and all these plans. Now it's like you were saying there, do I want to pay the taxes now or pay the taxes later? So it's like having all these choices is a good thing, right? Because it can integrate into our master plan.
Yeah, it's great to have so many choices, but I think I've read different things that once you give somebody choices, say more than about 3 choices, they kind of get befuddled by it. They don't know what to do. And I think that's the whole reason why you want to work with somebody like myself that really understands all the ins and outs of this. And that's, again, one of the reasons why I like doing the workshops because then I can talk to the people face to face. Another thing that I do, Robert, before I do my workshops, I get a list of the people that are coming, and either a night or two before the workshop, I call each one individually, invite them and say, hey, there's 3 reasons for my call tonight. One is to remind you of the workshop, where it's located. Second, to introduce myself as the presenter. But third, more importantly, I say, Mr. Smith, hey, Mr. Smith, I just wanted to know, did you have any specific questions or concerns that you want to make sure that we either address this evening over the phone or in the presentation itself? Because I've found over the years, Robert, people learn the best from examples and hearing other people's questions.
Yeah, and that's a really good strategy that you have there, and it's so easy to do. And I mean, this is the Marketer of the Day podcast, so I always like to listen about what people do and what their expertise is, but also what they do as far as the system to keep the trains running, so to speak. So that's really cool. You do the workshop, and a lot of people out there just might say, okay, I'm doing the workshop, it's at this hotel, here's the time and date, they'll just show up. But you say you go through that call list the night before, and you call everyone so that way that they make sure that they attend. And they might have previously backed out or had other commitments, but if this person called me, now I'm way more likely to show up there. And then you kind of make that easy, quick connection. And then I also like how you get their questions, so that way you can tailor the presentation, the workshop a little bit more towards them, especially if something's all on their mind. But that's also cool how you said in there that you answer their question either at the event itself if they need something more long form, or right there on the phone if it's more of a private situation. Did I hear you right there?
Correct. And that's also one of the 2 other things that I do after the workshop. I send everybody who attends a handwritten thank you, thanking them for coming. Even if they don't want me to follow up, I just thank them for their time, because I know their time's very valuable and people are busy. And then also what I do at the workshops, I give people the opportunity to spend 15 or 20 minutes on the phone with me on those personal issues, because maybe they have something that is so deeply personal they don't want to share it, or they have a question on maybe how to pay off debt or something maybe that we did not directly address in my retirement income workshop.
So along those lines, as far as, sometimes people have a little bit of that money shame or some crazy problem like paying off a bunch of debt or something. Do you see a lot of that? Do you see that problem of the emotion attached to the money, and they can't even think just because they're going on this whole roller coaster, just thinking about money, just thinking about retirement?
Oh yeah, and that's the reason why when I'm doing my workshops, I'm really looking for people coming who typically are 60 to 67. I help people that are younger than that, but I find this is a time where Social Security is one of the issues, but retirement is really staring them in the face, because they've got a couple years and then they have to, pull the plug, or maybe, unfortunately, maybe they do get laid off, and then they can call me and we can work through those plans. Because the other thing is, the retirement income plan that I help clients set up, the spending plan, variability into it. It's something that is kind of a living and breathing document, because we want to make sure that, again, that they run out of life before they run out of money.
Right. Well, so you've mentioned Social Security a couple of times here, and I'm a super young guy. I'm mid-30s, so I expect Social Security to be down to 0 by the time I'm that age. But you always hear in the news and things like that because there's so many of these people who are going to live, to this old retirement age, as you said before, you always hear how Social Security will be bankrupt by such and such a date, or how it'll pay off so little that we can't depend on it and we have to have these other streams of retirement income. So, what do you think about all that? Do you think that Social Security is something that we can't necessarily depend on?
Well, I think, Robert, a lot depends. Yes, at your age, in your mid-30s, I do believe Social Security will be around when you retire, and a couple of different reasons. First, when Social Security came out in 1935, it was either going to be what's called a fully paid up system or pay as you go. So as it is right now in 2034, Social Security will still be able to pay 79 cents of every dollar. So if you hypothetically in 2033 were getting a dollar, they'd have to cut that to 79 cents. Also, you got to remember, as people get older, they typically vote. And so it's kind of that sacred cow that no politician wants to tell people that they're going to cut Social Security.
Interesting. Well, so good. So no reason to panic. That's a lot more optimistic viewpoint than you normally hear about that.
Yeah, but then also with the cost of living and everything else, because Social Security, there was a study done that in 2018 that now that dollar you got in Social Security back in 2000 is only worth 64 cents now. So it does go down in value. And so you definitely have got to make sure that you are saving money so that when you do retire, you've got enough. Because true financial freedom, Robert, is when your kind of money that you have saved is generating enough in income so that you could walk away from a job. You still might stay in a job, but then it's like you really love this job. It's not like you're going to force yourself every morning to get up in the morning so you make sure you get to your job by 8 o'clock.
Yeah, you're in the job because you want to. It's your passion. You're not doing it just for that paycheck. So do you have any sort of metric you help people hit, or some sort of strategy? Like, does it come down to just what will your living expenses be based on that? Here's what your retirement income will be, or like what's sort of the formula or the calculation there?
Well, I would answer it generally in two ways. One, I'll give you kind of the generic standard answer and then a personalized answer. The standard answer is we say in the industry maybe need 70 or 80% of what you are making before you retired is what you need to have in retirement. That's kind of the generic answer. And if you're somebody at your age, that's what you're going to want to strive for. But remember that you're going to have inflation. So the rule of 72 is if you divide, say, inflation, that inflation rate into 72, that's how many years it's going to take that you need double the amount of money. So an example is at a 3% inflation rate every 24 years, you need to have double the amount of money, meaning that if you could live on $5,000 a month now, 24 years from now, you need $10,000 to live on. But from a more personalized thing, I do use retirement income software, tax software, Social Security software, financial planning software. I mean, when I do planning for clients, I use 4 different financial planning type programs. And I really then find out from the client, where are their expenses? Do they want to travel? Because typically they're going to want to spend more money right when they retire than later on. It's kind of generally, it seems that people spend the most money right after they retire because they kind of have all this pent up desire to go on vacation and have fun. Then they kind of relax and get into the mode of, hey, I can kind of stay at home, maybe do some volunteer work, stuff around the house. Then as they get a lot older, like in the case of my parents are 87 and 88. And now their costs are going up because now they need a lot of long-term care. And that's an area that people really, it is a real kind of time bomb out there that people are just really not thinking about the long-term care issues of, when they're in their 80s or 90s.
Right. Yeah. A lot to think about. And that's really interesting how you kind of blend the art and the science there, right? You have the science aspect, you have all these different software where you run the numbers, and then the art part where you say, well, there will be these years where you're going to want to get the travel bug out of your system, these years where things settle down due to the volunteering, and these other years where the expenses will go back up due to the long-term care stuff. So, I mean, it seems like there's a lot of things to talk about, or a lot of things for people to account for, I should say. And so if someone is looking for a financial planner such as yourself, are there a couple of or a handful of criteria they need to be on the lookout for? Like, should they be looking for someone who uses the software that you do, or what sorts of things should people be on the lookout for when searching for a financial planner?
Well, first off, I think you do want to look for those qualifications. Somebody is a certified financial planner like myself. I've been a certified financial planner for 26 years. I did that in 1992. That's the other reason why I myself got the RICP to be even more detailed in this area. You really want to look at those qualifications. Another thing is, how long have they been in the industry? You want somebody, I've been doing this for 30 plus years. It's really what I've done ever since I got out of college. Another big thing is so many people in this industry are what I call investment advisors because they make money based on somebody's investments. I take a more holistic approach where I look at the whole person and how can we really do this plan, because so much in retirement yes, money's very important, don't get me wrong, but it's only one portion. It is those social issues. It is the long-term care. Do they have family members to help them through things? And then I think a really big thing you have to look at with somebody is really their passion and their trust. You've got to trust this person, because one of the things I've found over the years, Robert, it's very difficult when people come to me. They have to trust me because financial planning is really an intangible. And it's great when I'll have clients say 10 or 15 years down the road. I can think of one client that worked for the state of California, and they could do what's called deferred comp through the state. And I remember that client telling me 10 years after we set it up for him, he goes, "Bill, I'm so glad we did this. I didn't know anything about this, and it wouldn't have been able to do this if you hadn't told me about this and helped me set this up 10 years ago."
Awesome. So it's like you know the ins and outs because you're certified, you've been in it for a while, you look at it holistically, and you have that passion. And I think that we've all dealt with accountants and numbers people who definitely didn't have the passion, and it wasn't a fun experience. But then, and I don't know how to quite put my finger on it or identify it, but then when I when I have like a CPA or someone that I'm working with who's doing my numbers for me, when they're excited about, we'll do this piece and that piece, or they're proactive about, well, let's think ahead to this, like it's a lot more fun, right? Because it seems like they're not just going through the motions. That financial planner or that accountant is having fun, and it seems to rub off on us too. And it seems to just be a way smoother experience.
Yeah, and let me clarify a couple things, Robert. You mentioned CPAs. Hey, they're great at what they do, but CPAs are very myopic. They stare and they record history, because normally you're going to your CPA or your tax person after the tax year is up, and you just want to know how much you owe in taxes. And so they're kind of real bean counters. Their training is not looking into the future. My first job out of college was doing tax returns. And back in the day, 30 years ago, it was such that if you were a client of that firm, you would meet the partner of the firm. I was in the back room with two other accountants, and we literally, back in the day where it wasn't all computerized, we would get your tax return and take the information out of a drawer, put it back in the drawer. And so you'd always just meet the partner, and they're typically not proactive. A good example of this is, we were talking earlier, I talked about a Roth IRA. Most CPAs believe in deferring taxation. So I'll say to a client, well, if you pay $1 in taxes today, but we can save you $5 in taxes, say 5 or 10 years from now, it makes sense. Most CPAs, again, good at what they do, will say to you, oh, you need to save that dollar today, not looking at being proactive down the road. There's that. And then so many, again, quote, financial planners, because you're a financial planner when you balance your checkbook, they're just into investing. They are investment advisors. They don't have the breadth of knowledge and experience to look at all those other areas. And a key, they're getting paid to sell you investments. They're not getting paid to look at all these other things. That's why I stress again the fact that I a lot of times I work on a fee basis for the client, so I can look at all those ins and outs of their financial life, so we don't overlook something that typically an investment advisor would.
And you hear horror stories like that, right? You hear about how there's some investment advisor where they're just looking to sell you on such and such package, or they're looking to make money. And you hear about, guys like Dave Ramsey or Tony Robbins, now that he's kind of getting into all this like money stuff, they always talk about having a fiduciary financial planner. So can you kind of unpack that a little bit and tell us what that is and why that's important?
Sure. Well, first off, fiduciary, it's a term that a lot of people have heard about because the government under Obama through the Department of Labor was going to say, okay, if you recommend as an investment advisor, if somebody is to roll over their 401k to an IRA, you need to make sure that the client's interests come first. Well, I want to state that's been my philosophy since I ever started in this business. But beyond that, I am what is called a registered investment advisor. That's what allows me to charge fees to my clients. You have to be a fiduciary under that. Also, as a certified financial planner, I'm a fiduciary. Whereas, yes, if you just go to somebody who can do something on a commission basis, they don't have to be a fiduciary. See, most people who work for the large firms out there, they're an employee of the firm. And, when you're an employee, your first job is to satisfy your employer, not the person who's, quote, your client who's sitting across the table. Whereas for me, I've always been independent in this business. And so that person across the table from me is my client and is my employer. So you really want to ask that financial advisor, are they a fiduciary and are they willing to really sign a fiduciary clause? I'm willing to do that for my clients because I want to make sure that we're doing what's best for the client, because that way I can sleep good at night just as well as my client can sleep at night.
Cool. So you're one of the good guys, and we should be looking for someone who will sign that fiduciary clause, so that way they actually act in our best interest. So this is a lot of great stuff for us to think about, whether we're at whatever age, whether we've held the same career, same job, whether we're self-employed, business owner, freelancer. We're all going to need to solve this problem sooner or later. And if we don't need to solve this problem, that means we're going to die early. And who wants that, right? We all want to live to that ripe old age to do all the things on the bucket list that we want to do. And like it or not, we need money to do that. We need money to live. We need money to travel. We need money to sustain ourselves. And we need to do the work now and do the planning now, because when we're older, we might be older, we might be tired, we might say, darn, I wish I'd done such and such 30, 40, 50 years ago. So this seems like a really important topic for us to all be thinking about. So if people liked our conversation here, Bill, and they either want to check out your workshops, check out your website, check out your book, or start a conversation with you, what sort of resources do you have for us? Where should people go?
Well, probably the best place to go is my website, which is www.billcorleyplans.com, because on there I'm listing the workshops. The book will be listed on there, different things about my background. Also, you can get in contact with me because my email address is on there. I think that's the best way. Or come to one of my workshops. But as I said, they're right there on the site. And I guess I'd add one last comment. It's never too late to start. I get a lot of people who say, well, should I do this? It doesn't matter if you're 30, 40, 50, 60, even 70. There are things you can do to better your financial situation. The key is you kind of got to get out of your seat, come to a workshop of mine, and do something about it.
I love it. Yeah, just sitting around and waiting for things to magically change won't do anything. You have to take that first step. So billcorleyplans.com. And just to make sure we can spell that name, that's Corley. So that's BILLCORLEYPLANS.com. And then, so one last thing here as you wrap up. So you're based in Folsom, California. Even if someone is out of state, are they still a good person to talk to? Do things still apply if they're not in California?
Yeah, they are. We can do things with people out of the state. I just need to talk to them because there are some rules and regulations by the federal government of working with people in other states. But that's something I could talk to somebody either via email or over the phone to make sure that everything is, up to par.
All right, fair enough. So make sure that if you're at all curious about any of this stuff, then reach out to Bill and tell him your situation and see if things can be moved in the proper direction. So billcorleyplans.com to check out those live workshops, to check out his books. And the most important thing on that site is Bill's email address. So you go to that site, billcorleyplans.com, go and email him and tell him how things are going. Tell him your age, tell him your financial goals, and just tell him what problem you think he can solve for you as far as your retirement, as far as living to that ripe, old, healthy age where the money that you earn now will pay you again and again for the rest of your life, which is the dream, right? Retirement. So thanks, Bill, for stopping by. And everyone should go to billcorleyplans.com. And I appreciate you coming on and telling us what we need to know about this sometimes dreaded, but really important, really necessary subject of retirement income or retirement planning. So I really appreciate it.
Well, thank you very much, Robert. And one other thing, if you are a verbal person like I am, let me just also make sure people have my phone number, and I'll give you that number. It's area code 916-223-4023.
Awesome. Thank you. Do you want to be a sponsor for the Robert Plank Show? Make sure to go right now to robertplank.com/ask, fill out the form, and tell us how you'd like to sponsor the show. Thanks for listening.